As we look forward to 2026, we need to start gathering what we need to file our 2025 federal income taxes. And the big question is, what's new and what's different for 2025? It's time for another update. I'm the Tax Geek, and here is what's new and what's changed about your taxes for 2025. Oversimplified. There are a lot of changes to the tax code for tax year 2025, more than in any other year in recent memory. In addition to the normal adjustments for inflation, several components of the Tax Cuts and Jobs Act of 2017, which were due to expire this year, have now been made permanent parts of the tax code. And several new provisions were enacted as part of the One Big Beautiful Bill Act, which we'll be referring to as the OBBBA. Many of the new provisions of the OBBBA get their own dedicated videos, which are being released along with this one. Each of the new Schedule 1A deductions get their own videos, and the Child and Dependent Credits video is getting a long overdue update. Where there are minor changes to individual video topics, usually updates to phase-out thresholds, those changes will be noted at the top of the video description as well as in pinned comments. To start with, here are the standard deductions for all filing statuses. The OBBBA increased the standard deductions by more than the inflation-adjusted amounts that were originally scheduled for 2025. The big news for 2025 is the establishment of 4 new tax deductions that will be in addition to any standard or itemized deductions. These new deductions do not require you to itemize deductions. All of these new deductions are in effect only from 2025 through 2028, unless of course they are extended. First, the tips received deduction, more popularly known as no tax on tips, allows most customarily tipped employees to deduct up to $25,000 in qualified tip income per return. Next is the overtime received deduction, again more popularly known as no tax on overtime, which allows most employees who receive overtime pay to deduct up to $12,500 of that overtime pay per spouse. Then we have the car loan interest deduction, which allows most purchasers of new, American-built vehicles to deduct up to $10,000 in vehicle loan interest paid on up to 2 vehicles. And finally, there is the new senior deduction, which allows most taxpayers aged 65 or over to take a deduction of up to $6,000 per qualifying spouse. This deduction is in addition to the ordinarily enhanced standard deduction people aged 65 and over already receive. All of these new deductions have upper income phase-out limits, and none of these deductions are available to married people filing separately. There are changes to the child tax credit for 2025 as part of the OBBBA. The credit has been increased to $2,200, and the maximum additional child tax credit, the refundable portion, has been increased to $1,700. Both of these amounts will be indexed for inflation as well. The $500 non-refundable credit for other dependents remains unchanged. A huge benefit for many people will be the increased state and local tax, or SALT, deduction limit, which has been increased from $10,000 to $40,000 per return. The limit reduces by 30% of the amount of adjusted gross income that exceeds $500,000, but the limit won't decrease to less than $10,000. All tax credits for clean vehicle purchases, residential clean energy installations, and residential energy-efficient home improvements have been repealed. Both the new and used clean vehicle credits expired on September 30th, 2025, and the residential energy credits expired December 31st, 2025. If you made these purchases before these dates, you will still be able to take those credits for 2025. Here are some changes for 2025 that affect small business people. There is a minor change to the qualified business income deduction. To claim the deduction starting in 2025, you must have at least $1,000 in qualified business income. The threshold for filing Form 1099-K has been re-established at $20,000 or more than 200 transactions in a given year. The threshold for filing Form 1099-NEC has been increased from $600 to $2,000. The maximum Section 179 deduction has been increased to $2.5 billion, and that amount, as well as the new $4 million phase-out threshold, will be indexed annually for inflation. And 100% bonus depreciation is back and will remain in effect for the foreseeable future. Now let's take a look at some new or revised tax forms. Many of these forms are still in draft form and may differ slightly from the forms being released. Here is the 2025 Form 1040. The biggest difference is the new dependent section. It asks more detailed questions to ascertain if the dependent is eligible for either child tax credit or the credit for other dependents. The credits themselves are still calculated on Schedule 8812. Line 13A on page 2 of the 1040 is the total of all the new OBBBA deductions described earlier. These deductions are all calculated on the new Schedule 1A. Schedule 1A has 4 different parts for calculating the various deductions. Filling out this form is covered in the videos on the individual deductions. If you sell or trade digital assets, the IRS has a new reporting document, Form 1099-DA, Digital Asset Proceeds from Broker Transactions. Cryptocurrency brokers are required to provide this information for their clients, but more likely than not, this will be reported as a section on an ordinary brokerage statement. Are there more changes for 2025? Yes, indeed, but these are the changes that affect the vast majority of ordinary taxpayers. Additional resources and information on all the changes that will be taking effect in 2025 are linked in the video description. And as 2025 draws to a close, I'd like to give a big thank you to everyone who has watched, liked, shared, commented, and subscribed. If you found this video informative, please give it a like and subscribe to the channel for more oversimplifications of our increasingly overcomplicated tax system. Please also share this video with anyone who could find it useful. And your questions, comments, and suggestions are always welcome in the comment space below. Thanks for watching, and I'll be back throughout 2026 and beyond with more of your taxes oversimplified.